Hey, I am Matthew. And today we are going to see the impact of COVID-19 on retail banks and banking sector. And discuss the ideas to reposition themselves in the economy. Indian economy basically depends on three sectors. Namely, primary sector, secondary sector, and tertiary sector. And all the three sectors are being majorly supported by the banking sector. Banking sector is providing the financial support to all these sectors. If banking sector get impacted by any obstacle, its consequences will definitely be faced by all these three sectors, which are the pillar of the Indian economy. And it is the same in context of what's happening right now. The COVID-19 pandemic has caught organizations off guard, and banks are no exception. To survive this unprecedented crisis, most financial services firms worldwide are working in bare-bones model to ensure business continuity. Firstly, let's learn about the basic banking corporate division. There are mainly 5 divisions: retail banking, corporate or commercial banking, global banking, private banking, and investment banking. As we are focusing mostly on retail banks, so let's first understand what is a retail bank. And what does it do? Well, the retail banking division takes care of the regular day-to-day banking, for what most people know banks for. This includes providing checking and saving services, and issuing credit cards. Retail banking divisions may also be in charge of providing loans, mortgages, and other financing. However, retail banks usually offer banking services to individuals and small businesses. Now that we have got to know all the basics, let's jump straight to the main topic. That is the impact of COVID-19 on retail banks, or, simply to put, banks. Banks are negatively affected as bonds and other traded financial instruments have lost value, resulting in further losses for banks. Banks face increasing demand for credit, as especially firms require additional cash flow to meet their costs, even in times of no or reduced revenues. Banks face lower non-interest revenues, as there is lower demand for their different services. Low interest rates, close to zero or even negative, are here to stay for much longer. This will certainly put further pressure on banks' profitability. Banks will also see a rise in Npa and Npl across the globe due to severe impacts on businesses' profitability and consumer sentiments. You must be wondering, what is Npa and Npl? Well, non-performing asset or NPA is a loan or advance, for which the principal or interest payment remained overdue for a period of 90 days. And non-performing loan or NPL is a bank loan that is subject to late repayment, or is unlikely to be repaid by the borrower in full. I am thinking, after discussing so many crises that is being faced by banks, we should probably look into the matter of what banks can do during recovery phase and reposition themselves. First, digital banking. Demand for digital banking has never been greater. According to the results of a survey among Indians on the impact of the coronavirus and their usage of digital payments, as of April 2020, a majority of respondents reported no change in their use of digital payments. However, 33% said they use digital payments more than before, while 9% made online payments exclusively. If banks want to reposition themselves in the economy, they need to increase digital payments, as social distancing might become the new norm, and personal interactions between bank and client carry even higher costs. Second, branch banking strategy. Footfalls in branches will continue to reduce, resulting in more branch closures. Banks need to rethink the overall channel strategy and reduce the reliance on the branch as a channel for revenue generation. Third, reimagine customer service. Quality of customer service becomes more critical during any crisis, as the paranoia increases call volumes at service desks. Having an elastic workforce will help manage such situations. Banks should adopt smart banking solutions like virtual call centers, chatbots, and intelligent email automation to create an elastic workforce. that can be ramped up, or down, per business demand. Fourth, rethink operating model. Still, banking operation is heavily reliant on manual interventions. Banks must perform end-to-end customer journey mapping to identify opportunities for simplification and automation. Location diversification and low-cost operating model are other areas to focus on. Lowering operating expenses and eliminating geography risk. Fifth, banks should also have work-from-home ready workforce and infrastructure to manage eventualities, such as the COVID-19 pandemic. Sixth, banks should also develop policies, procedures, and controls to monitor and manage remote working staff. Thank you.